Welcome back, students. This is the fourth part of national income. In this part, I am going to discuss methods of measurement of national income. This is very important. There are three methods of measuring national income. Number one, income method. Number two, output method or product method, and number three, expenditure method. So all the three methods we have to discuss. Number one, output method. This method of measuring national income is also known as product method or inventory method. This method approaches national income from the output side. Output is production. So according to this method, the economy is divided into different sectors such as agriculture, mining, manufacturing, small enterprises, commerce, transport, communication, and other services. The output or product method is followed either by valuing all the final goods and services produced during a year at their market price, or by adding up all the value at each higher stage of production until these products are turned into final products. While using this method, utmost care must be taken to avoid multiple or double counting. To avoid double counting, this method suggests two alternative approaches for the measurement of GNP: final goods approach or final product approach. Final goods are those goods which are ready for final consumption. According to this approach, value of all final goods and services produced in a primary sector, secondary sector, and tertiary sector are included, and value of all intermediate transactions are ignored. Intermediate goods are involved in the process of producing final goods, that is, the final flow of output purchased by consumers. Hence, the value of final output includes the value of intermediate products. For example, the price of bread includes the cost of wheat, making of flour, etc. Wheat and flour are both intermediate goods. Their values are paid up during the process of production. In the final product, that is bread, the value of intermediate goods are already included. So, a separate accounting of the value of intermediate goods along with the accounting of value of final product would mean double counting. So, to avoid this, the value of only final products or goods must be computed. I can give another example: sugar cane and sugar. Sugar cane is an intermediate good, but sugar is a final good. So in the process of sugar, the sugar cane is also considered, so we need not have to count again. That is what you have to understand. Value added approach or value added method. In order to avoid double counting, value added approach is used. According to this approach, the value added at each stage of production process is included. The difference between the value of final output and inputs at each stage of production is called value added. So, GNP, that is gross national product, is obtained as the sum total of values added by all the different stages of the production process till the final output is reached in the hands of the consumers to meet the final demand. Value added at each stage is calculated by deducting the value of inputs from the value of output produced. The sum total added at different stages make G and P. In the table, the value of final goods, so for example, is 500 rupees. The shirt is the example. We have taken shirt as an example. So the price of shirt is 500 rupees. The sum total of value added at each stage of production is also rupees 500. Look at the table. So see, the cotton price, that is 150. Yarn is 100. Cloth is 150. Shirt is that is 100, and so final total value is 500. So 150 plus 100 plus 150 plus 100 is 500. Precautions. While estimating national income by output method, we have to take following precautions. Number 1, to avoid double counting, only the value of final goods and services must be taken into account. Second, goods used for self-consumption by farmers should be estimated by a guesswork. Imputed value of goods produced for self-consumption is included in national income. Second, indirect taxes included in the market prices are to be deducted, and subsidies given by the government to certain products should be added for accurate estimation of national income. This is the first method, product method. And another precautions, while evaluating output, changes in the price level between different years must be taken into account. Value of exports should be added and value of imports should be deducted. Depreciation of capital assets should be deducted. Sale and purchase of second-hand goods should be ignored because it is not a part of current production. Output method is widely used in the underdeveloped countries. However, it is less reliable because of the margin of error. In India, this method is applied to agriculture, mining and manufacturers, including handicrafts, but it is not applied for transport, commerce, communication sectors, etc. This is the first method. This is the first method, and what are the precautions we have to take, what are our approaches for that we have discussed. This is output method, and this is also called as product method or inventory method. There are three methods, one by one we have to discuss. This is the first method we completed over here. Thank you very much.